Welcome back to the channel. Now, in this month's analysis, I am going to walk through a really high-level broader market overview. I'm going to cover all of the major indexes and asset classes. I'll cover the Magnificent Seven as well as 15 individual stock ideas going into December, along with some logical price targets. It has taken, as usual, around 20 hours to prepare, present, edit and upload, so I do hope you find a lot of value from my hard work. For those of you that are new and just stumbled onto my work, hopefully the Scottish accent isn't too difficult to understand. But before I get into the charts, the market over the last month has been absolutely incredible. If you picked up our analysis last month, hopefully my work and the ideas have helped you in some way. Some big performances there. The Muppets of mainstream media and Wall Street keep telling us only 7 stocks are going up, so I'll be taking a little bit of time this month just to shoot down that narrative. The way I learned it, as I'm sure most of you have, is the best players really should be scoring the most points. But like I said, there have been a lot of top performers. The major indexes and the US dollar have done exactly as hoped. So thanks very much for those of you that have sent me kind messages and emails. I do appreciate it very much. And if you do follow my weekly letter, the weekly grind, and me on Twitter over the last month, hopefully that's also helped you to stay the course. But let's not dwell on the past. We've got the final few weeks of the year to look forward to. As always, I'm hoping there's nothing sinister sitting around the corner, but there are a few things that I think we need to be aware of. But please do smash a like button, subscribe. It all helps with the YouTube algorithms and gets my work a lot more noticed. But for most of you, I think most of you get this already, but for those of you that are new, I just want to categorize and state that I'm not a perma bull or a perma bear. I'm open to all outcomes. I analyze the data as it comes in. For disclosure, for the last 3 months, our client work has been mostly bullish, and I am going to be sharing many of our favorite charts today, but please understand that managing risk is always the priority. My work is not geared towards buy and hold forever, but for disclosure, myself or my clients may hold positions in some of the names mentioned, but as always I have highlighted those disclosures as well as the timestamp charts on the analysis for you. If you're new, I like to use a combination of technicals and fundamentals. I'm a huge advocate of systematic process. Most of you already know that I don't use the magical hindsight indicator, and I timestamp all of my work, which is massively important. I'm not one of those analysts that makes broad market calls before they play out 2 years later. I'm one of the very few who go on the record with their work. I timestamp absolutely everything. But my work is for most folks. I think if you're an everyday investor, trader, options trader, financial advisor, money manager, my work really does apply to most folks. But I am looking for structural trends in the market that will usually last weeks to months. I use logical price targets. If we sat and had a beer, I'd tell you that I'm personally more of a technical investor, but like I said, my work applies to most styles. But with my technical work, it is known for my ability to highlight the big risk-on, risk-off turning points. I've got clients at most of the major investment banks now, but if you stick around till the end, we do have a huge Black Friday offer that I will be communicating, but I will get into that later. But please do pause the video, make sure you are comfortable with that very, very important disclaimer before we continue. But I think with the charts, it really makes a lot of sense to just start probably with the most important charts at the moment. I think we've got the S&P 500. Now, if you picked up the analysis last month, just to quickly draw your attention to one of the reasons that I was looking for potential bottom to the recent correction was the stocks making new lows peaked back in October, and we've continued to see the breadth in this particular metric fall off a cliff, which, if you have bullish posturing, is exactly what we want to see. We want to see the new 6-month lows list continue to decline, and that's exactly what we've seen. But to the other side of things, we've got a breadth expansion in the percentage of stocks that are trading above their 200-day simple moving average. So the hope is that this can continue to climb. We are going to see lots of rotations. There's a lot of the mega cap tech names, which I'll be getting into in just a few moments, have been ripping off into the sunset. They are probably due a little bit of a near-term pause, but what will often happen in any bull market is we will find these rotations into different areas of the market. But for the S&P 500 and for the SPY ETF, I do have a very, very close eye on this 460 level. But the absolute key to absolutely everything remains the US dollar index. If you don't know by now, I have been banging the drum on this inverse correlation for years. This has been, I'd probably say, the most important chart that's helped me to identify the big turning points over the last couple of years, get defensive ahead of corrections, pick up market bottoms, etc. The inverse correlation remains intact, and when we drill it down to the shorter term time frame for the US dollar index, just to highlight, I think this is a lot cleaner. The stocks really started going down when the US dollar was rising, and of course what's happened, we've put in another failed move and stocks have been going up over the last few weeks. So the hope is that the US dollar index can continue to fall away here. I do have an eye on this $100 level as a potential target, and if the dollar index can reach that level, then given the inverse correlation, then you would expect stocks to continue to move higher. But again, given the weighting for the euro within the dollar index, we want to know what the euro's doing. And the euro, for me, looks like it's starting a bit of a new uptrend. So the hope is that if the euro is going to continue higher, of course, that'll be bad news for the dollar index. So it's really a big interconnected market. We already know that the 10-year note yield, if you look at the bond market, we can see that these have been tracking quite closely. So I'm actually hoping that we're actually dealing with a bit of a top in rates here. I'm sure most of you have already seen my bullish call over the last few weeks on TLT. It's been massive when we look at the bond market, but it's not just bullish calls on the bond market. Again, for those of you that do follow my work closely, I made a massive bearish call with a massive bearish target months ago. At the time, I had money managers calling me an idiot. I had nasty emails, etc., etc. But ultimately, this is what technical analysis does. It just helps to identify the logical turning points in the market, and that's exactly what I'm looking at here with TLT. I'm looking at this $92 level as a potential near-term pause level for TLT. But I do want to see the 10-year note roll over. I think if we roll over and we start to move below 4.3, again, that really just gives a little bit more weighting that we can be looking at more of these growthier areas of the market. It'll also give a lot more confidence that we are dealing with a definitive bottom in the bond market. Of course, if TLT, which I think is probably the ticker that most folks use to express a bullish position in the bond market these days. Of course, if you're a money manager, you might look at things like AGG, etc. But yeah, I think if TNX continues to fall off here, then I think that can obviously give a bit of a further weighting to bullish posturing. But it's very, very pleasing to see the volatility index to continue to fall away here. This is really just a little very basic color coded chart. It just gives a good visual. I think as long as we are in this area here between 10 and 20, you absolutely need to be looking at stocks to buy. Of course, with volatility, it doesn't really announce itself in advance. So there's usually something that just kicks it on. But for the moment, for me, and like I said at the start, it's much easier to find stocks to buy at the moment than fighting uptrends and shorting uptrends. I don't really see the point in that. We've got the triple Qs, which again, if you follow my work closely, there's been a massive rebound over the last month from very logical levels. And again, I'm looking at the triple Qs, and I'm hoping that we are in the final run up to all-time highs going into the last few weeks of the year. The equally weighted S&P 500 again is looking very, very constructive. Again, big failed breakdown last month, and it's formed a bullish chart pattern, and it does look like it's breaking out and wants higher prices. That's always the hope with these charts, but of course we'll see what happens when the triple Qs and with the S&P 500 reach those upside levels. We've had a big rebound in the Russell 2000 over the last few weeks. Again, this is one of the charts that we've been working with our clients. Ultimately, the small caps, given I guess the declines that we've had in the small caps, obviously small caps get massacred during any correction. Most of them, will get cut in half, 60, 70, 80%. You just need to have a look at Cathy Wood and her ARC portfolios, etc. Just absolutely obliterated. But if you can identify the bottoms in these, and really the message has been to our clients and members over the last few weeks is, look, it's very, very difficult from a stock picking perspective because you'll still get the volatility within the small caps. They will be up and down 5-10%, and not everybody has the tolerance for risk. But I think when you look at the ETFs that are aligned with the small caps, and you could look at IWM, you could look at perhaps some of the leveraged ETFs, I think those are a better way to express a bullish position, and I think they're probably a little bit less risky as well. But with the small caps, we do have upside objectives there, up around 200. It's a very basic range-bound chart. We've got gold, which is getting a lot of airtime at the moment. I think everybody and their dog is expecting a monster breakout in gold. I'm not quite there with it yet. I think I do see what everybody else is seeing, but for me, I think the level to be aware of there is up around 2100. Now, I am about to get into around 20 individual charts for stocks, logical price targets. But if you are still here, tells me that you're getting a lot of value from my work. So it mean the world if you hit the like button, subscribe, share on social media, Twitter, Stock Twits, wherever you found my work. It would mean the world if you liked, shared and subscribed. But individual stocks now, again, when we look at things like Microsoft, etc. Now, just for complete disclosure, this has been a chart that we put to our clients a few weeks ago, made a bottom call on it. It's been working really, really well. We've met upside targets, but now we are seeing a big breakout in Microsoft. Now, obviously, we need to be aware of what the triple Qs do, what XLK does, etc., etc. But I like to use really useful tools like Fibonacci. Now, I understand for many of you, Fibonacci will be very, very complicated. Maybe some of you don't have the charting software to utilize it, etc. But for me, the market respects Fibonacci levels, and I think given that we have moved above the next Fibonacci level, I think it brings in this level around $500 for Microsoft. Now, the caveat to that is, and please understand that the market is very, very capable of shitting the bed. if the market does shit the bed, then that's where risk management comes in. And as everybody knows, I like to use very basic tools like trailing stop losses, etc. But the fundamentals, we obviously know that they're making a move into AI, etc. So very, very interesting chart for me still, despite it being all-time highs. We're now seeing potentially a breakout for Coinbase again, another disclosure. We've actually just hit our upside target today on this one, but if there is a further breakout there, I'd say around that 120 level, then I think that brings in the next target. I think when you have a look at the cryptocurrency space and what's going on with Bitcoin and Ethereum ETFs, etc., and what's happening with Binance and CZ, it does seem like Coinbase might be the last man standing in that space. They seem to do everything by the book, but I think the concern would be if regulators then start to go after Coinbase. That's obviously the risk with owning the stock. But at the moment, the market's telling us that the Coinbase is the one of the plays in the crypto space. We've got potential upside targets here at all-time highs dating back to 2021 now for Meta. Again, another disclosure, this is a stock that we've been covering all year. Big breakout over the course of the last week with ARM Holdings. If you pick up my weekly letter, I actually included ARM last week as a potential candidate, and ultimately it's put in a monster breakout this week. So for those of you that follow my letter and follow me closely, congratulations. I wanted to add this chart in there. I think the upside target there is around $69, which represents its recent highs after it fallen off a cliff after its IPO. Shopify, again, for me it's a Fibonacci chart, but even if you don't use Fibonacci, you can just zoom in here. I think there's a potential for a breakout there if it can get above that $71, $72 level. Nvidia has had a lot of airtime over the last couple of weeks. I think there's been a big massive consolidation over the last 4 months in the Nvidia stock price. The earnings, from what I can gather, look pretty good. There's probably a little bit of the whole China impact on revenues, etc. I believe has had a negative impact in the near term, but I think the market at some point is obviously pricing it in. And I think for me, there are two entry levels here. I think if there's a breakout above 500, then that is of course a level. But I'd also be very, very interested if there was a little bit of a pullback to that $400 level as well. I love range bound charts. I love buy low. I call them buy low, sell high charts. I'm not one of those analysts that follow the relative strength gurus out there that they're all posting charts, breakouts to new all-time highs, and I like to try and find relative strength at its source, and oftentimes I find that with range bound charts. Amazon, again, very, very close to breaking out. I think there's a level there around 150. Apple has had a little bit of a pullback. I covered this one last month. I thought I would just keep it in here. There is an all-time high target, I think, which makes a lot of sense for many folks. But I like everybody knows, I like to apply systematic process just in case that the market does decide to fall off a cliff a little bit. So our systematic process, our trailing stop is up at 185. ASML, I actually posted this chart to Twitter during the week and I got a couple of private messages on it, so I've included this one. Again, for disclosure, we've been covering this one for a few weeks, but I think if there's a breakout there above that $700, I think that brings in another 10% upside there for ASML. Netflix is now pushing up against those July highs. What I would say is, I think everybody likes Netflix. I think from a fundamental perspective, they continue to increase prices, which obviously I think a lot of investors like. I don't know anybody that cancels their Netflix subscription. I certainly don't. But again, it is probably due a little bit of a breather in the near term. But I would just, say that, work with a systematic process. If there is a pullback and it does decide to fall off a cliff in a meaningful way and come back and fill gaps, for example, then you obviously take yourself out. But I think pullbacks in uptrends oftentimes offer opportunity, and I think Netflix probably falls into that camp. Now, I made a big massive bottom call on Disney a couple of months ago. Lo and behold, it's been holding on to levels dating back many years, and it's rebounded 20 odd % off its lows. I have posted this chart to Twitter, so again, I've included it. Our trailing stop now is up at $91. Potential for a breakout in Coca-Cola. Again, it's just met our upside targets this week, but I think for those of you that are maybe looking at technical analysis and maybe a new entry point, potentially that this level here, the market's telling us that this is an important level. So I think if there's a breakout there above that $59, $60 level, then potentially that could signal a bit of a new breakout there in Coca-Cola. XPO, again, one of the charts from our chart books, we are working with an upside target at $100. What I would say is, if you're not familiar with the term, the $100 roll, what the $100 roll essentially is when you start to get a stock that's in an uptrend, which I think XPO, I think we can say it's in an uptrend. It's been consolidating sideways for a couple of months and then it's put in a big breakout. Once a stock gets to that $90, $91, it's almost a given that it's going to go and test the $100 psychological round number. That's oftentimes a pause point for stocks, the $100 level, the $1,000 level. It's often overlooked as a technical tool, but I like these round numbers, and I think XPO moving towards 100 hopefully will make a lot of sense. Uber, again, one of those charts I think is probably due a bit of a pullback in the near term. We've been covering it since the breakout, but we are working with upside targets around that 61 to 63 level. But given the overbought condition of the market, a pullback is reasonable. But I think with any uptrend, like I said before, pullbacks and uptrends oftentimes offer opportunity. BOING, again, hoping to see a further breakout there around 220. Again, we've just hit our upside targets this week on it, but for new investors into BOING, I think it might make sense if there is a confirmed breakout there. Maybe something around 222, maybe 223. DraftKings continues to work unbelievably well. Again, it's just one of those charts that they've raised guidance, really positive earnings, very happy with it. It is in an overbought condition, which is a characteristic of an uptrend. It's not extremely overbought, so it is just consolidating nicely at the moment. I would hope to see some kind of spike in price over the coming weeks. But like I said, if my thesis of a bullish position in DraftKings is wrong, I would just urge everybody, if you're someone who maybe gets a little bit stressed when you get those big massive declines in the market or stocks, I can't emphasize enough how much systematic process just helps sleep at night. So I think that's something to keep an eye on. Potentially Petróleo Brasileiro, if I'm pronouncing that correctly. I think above 1550 might make some sense there. It looks like a bit of a bullish pattern that's developing. CBOE, I've been covering this one for months. I will continue to cover it. Just the narrative that we're dealing with only 7 stocks that are dragging the market, it could not be further from the truth. If you are listening to these folks, if you pay attention to them, if they're telling you that it's only 7 stocks, go and have a look at the performance of the S&P 500 and the stocks that have made monster gains this year. It's not a market of 7 stocks. And CBOE is just one of the stocks that are making new highs. Potentially dealing with a breakout here in wheat and precious metals. Again, this is one of our charts from our chart book. We are working with upside targets there around 52. Morgan Stanley, we've made a bottom call on this one a few weeks ago. Again, I think it is a range bound chart at the moment, but I think working with targets there, hopefully up around 90, will make some sense. Big bottom call recently on McDonald's. Again, looking for a further 6% upside. I think there's a $300 target that I've put on it since it's put in a failed breakdown, which is something that I think, probably just to communicate, is something that I actively look for. I think one thing I've noticed with especially a lot of fellow professionals and technical analysts, etc., a lot of them rely a lot on scans. You'll see them post breakouts to new 52-week highs or breakouts. The reason the failed move is very, very difficult to spot is because the only real way to find them is by scrolling through thousands of charts every week. So this is one of the reasons why I like buy low, sell high, is because they're not charts that everybody else is typically looking for, and you can actually find relative strength at its source by finding these charts. So ultimately, McDonald's is just one example of many, but it looks like it's potentially breaking out. It is, I think, probably overbought at the moment. Perhaps a little bit of healthy consolidation sideways, but I think there's another 6% upside to potentially squeeze out of it. Dell just continues to go from strength to strength. Again, this is one that we've been covering for months and months. If you're not aware of Dell, probably the best laptops in the world. The XPS is brilliant, but I think the chart is still in a very, very bullish regime, and it looks like it's potentially breaking and taking its next leg higher. But just to be aware, we have been covering this one, way down at $45, and it just continues to move from strength to strength. Synopsys, they have earnings coming up this week. It's an $80 billion market cap if you've never heard of it. Again, it's one of those charts that I would just apply a Fibonacci tool. I think it probably makes a lot of sense there. But I think for me, as most of you know, I would never advocate, gambling on an earnings outcome. I think that's a surefire way to lose money over time. But perhaps those of you that are looking for an entry into it, maybe waiting to see what happens with earnings. But again, we've been bullish on this above 430. And we have American Airlines. Now again, it's one of those bottom calls that we've made recently. Potential change of character, change of trend, and the next breakout level for me. I think the market this week is telling us that this $12.75 level is a level of interest. So I think if there's a breakout here and this can get above $13, then again that just gives a little bit extra weighting that we are dealing with a potential bottom there in American Airlines. So I hope you've had a lot of value from my work here. I did say at the start that we are running a massive Black Friday weekend promotion. So we'll be running this one for a few days. But if you are wondering who I am and what it is I do, please do jump on to our website at honeystocks.com. We have memberships for all of our premium work. Just quickly run through it for you. We have access to our premium weekend analysis, which we provide our clients and members, which goes out every single Saturday. We have our high conviction investment ideas, which I'll show you what a high conviction idea looks like. But we do timestamp absolutely everything. We also have our midweek halftime report, which goes out every single Wednesday, which is a small 5-10 minute video analysis. We also provide access to a wonderful trading community, investing community, whatever you want to call it, with investors, traders, money managers, chartists, etc. We also provide access to all of our chart books, which includes all of our stocks that we provide ongoing coverage for. We provide access to all of our sector ETFs and commodities. And if you need a chart, we also have a chart request feature. So my platform has an ability to message me in real time. And also, if you are somebody that's quite new to the markets and you're trying to maybe learn a little bit of about systematic process and technical analysis, we also provide complete access to our full technical analysis program, which I'm told is very, very good and very, 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 very useful. But just to quickly show you what our high conviction time-stamped ideas look like, this is the recent idea that I put out for Coinbase, which has obviously done very, very well. Tesla has been massive on numerous occasions this year. This was an idea at the start of the year. Another idea for Tesla, Meta, which we made a bottom call on this one again nearly 12 months ago. It's been massive. CocaCola Corp has been massive recently. If you're not aware of what's going on in the uranium space, I would urge you to check that out. We also put an idea out for DraftKings, Amazon. There's many examples, Apple. So feel free to jump onto our website and check it all out. Like I said, I do timestamp absolutely everything. All of our big market calls, which I think, you know, if you sat down and had a beer with many of our clients and members, I think they'd probably tell you that that's what they value the most. My ability to highlight the big risk on, risk off turning points in the market. But I've timestamped everything for the last 5 years. So like I said, please do check it all out. But I think generally speaking, I think if you are somebody that has a mid-term approach, maybe you're looking weeks to months out, I think my work's probably a good fit. If you're somebody who just can't make day trading work because you're too busy, you get too stressed with it, again, my work might be a good fit. If you're looking to build a systematic process, maybe you just want to be part of a community and you're sick of hunting around social media for ideas and you'd like to have access to a professional analyst on a daily basis, again, my work might be a good fit for you. So like I said, please do check out our website, do all of your due diligence. We are, like I said, running our Black Friday promo, which will be running for a few days. So if you've stuck around to the end, thank you very, very much for watching, and I hope to welcome you very soon. Thanks very much.